Tuesday the 11th of April and we are on the FTSE 100. I've just entered into a long position after the 9:35 a.m. candle. Now, the trade today is a little bit interesting because when I came to the charts this morning, you can see these red arrows on the zones. It's because I was looking for sell positions. I was expecting the market to press up into one of these levels and then give me bearish signals and allow me to get short. Now, what has happened instead is from ATM, the market has rallied very, very strongly with almost no pause at all. We had a little bit of hesitation here at the 7,360 levels, and then the market continued its very strong rally all the way up to 7,390. We have then made a pullback. It's came down into one of the key zones I had identified, and it's given me a buy signal. So what I've had to do is change the way I was looking at the market and allow price action to guide me into the trade. It's quite important to do this. What I tend to find is a lot of people, when they come to trading, they have an idea in their head, and then even if the chart is screaming at them that their analysis is incorrect, they just stick with doing what they expected in the first instance. So I was expecting to look for shorts, and what would happen is something like you come up, you start to get these signals here, you see the pin bars, you try to get short, the market then rallies very, very strongly, it stops you out, it then comes up into your next zone and you think, well, this is really annoying, this market is definitely going to sell off. I've done my analysis, so you get short blind here because you have your sloping support and resistance. You can see the market beginning to pause a little bit. It has to make a pullback. Now you get short once again. It rallies up. You get stopped out once again, and then it comes up into these levels, and you see this very strong candle here at 9 a.m. And suddenly you think, right, I've just lost on two short positions. The market has made a huge rally. I need to get long and catch this. You try to get long up here. The market pauses, reverses, comes down, and stops you out. It's a very, very common way for beginners to trade. It's one of the most difficult things about trading, actually. Well, for me at least. Everybody's different, but for me, it's difficult to not to admit you're wrong, but to see that you're wrong and change your thinking very, very quickly. I like to think of myself as, sort of like a coal-fired generator. It takes me a little bit of time to get heated up. It takes me a little bit of time to see things. So I need to work really, really hard to make sure that I'm on the ball, that I'm always focusing on the market, always looking for those signals that I'm incorrect. Like today. Now, there's nothing to say that this trade is going to work in my favor. I should also mention that. There's nothing to say it's now going to push back up into the level up above and these previous highs. The market may come down very strongly. However, what has happened is the market has given me the signals that what I am looking at potentially is incorrect. And so when it gave me that setup to get long, I know that over the long term, what works best is letting the market dictate what I should be doing rather than what I think is correct. So I'm into a long position. I should also point out I missed a long setup at the ATM open. There was a setup to get long, I just missed it, and I would have been on the back of the whole rally the whole way up. Very, very strongly, great risk to reward trade. But I missed it. So rather than chasing it, rather than trying to jump in at random levels, I've just waited, watched the market, tried to figure out what it's doing. On this pullback here, I have got long, and we will see how this one works out. I'm just looking to take the market up into the zone up above, toward these previous highs, where I will look for my exits. We'll see how this one gets on. What I'll do is I will pause the video as always, guys. I'll turn it back on as the trade starts to move, or if I am making any decisions. And I'll talk you through exactly what it is that I am doing. Okay, the market has grinded its way up into this zone up above. I am just looking to exit. If we pop up into this zone, I am going to come out of the trade. So we've had the first very strong move up. We then had the pullback and this move up. So the second leg has been very sluggish and it looks like the bullish run is running out of steam. So I'm happy just to take profits off of this trade at the zone. What I will do then is I will talk you through the analysis from this morning and then the reasoning behind the zones and why I took the trade once again. Okay, so I've came out of the trade. The market is just hovering at this level. You can see we've made the two pins up at exactly the same price. The market is pressing up into that same price. It is then pausing and rejecting, so I'm happy to get out of the trade there now. So the ATM setup, first of all, right here, the one that I missed. You can see the market pulls down into the key zone, sets up with the pin bar, and then shoots up very, very strongly. Now, what I should also go over is the analysis from today with subscribers. I wasn't saying just blindly sell from these levels. What I was saying was I would rather sell from this area right here. And then if we broke above this area, we could look for the pullback and potential buy positions for a move up into this zone up above, which would become the next likely target. Now the market breaks up, pulls back. We just don't get the bullish confirmation signal to get into that move. We then come up, we pull back. This pullback, let's just shrink this down a little bit. And let's also use the Fibonacci. You can see the market shoots up, pulls back into the 38.2% retrace, which is lining up with the zone. We get the bullish pin bar. For me, I was happy to look to take the market up into the zone up above after seeing that. So, worked out, the trade worked out. Less than a 1-to-1 risk to reward on that trade. Now, that is the way I will trade on occasion. Now, for the majority of trades, I'm looking for 1-to-1 risk to reward or better. However, if the market is telling me that it's time to come out of the trade, or we're potentially starting to see resistance to that trade, I will just come out of the trade. I don't understand the whole holding onto your trade blindly, looking for a certain risk to reward. If you can read the market and if you know what the market is telling you, then it makes sense to come out of that trade. You've got money on the line. I'd rather lock in profits and come away from the charts with that profits in my trading account. Okay, so yesterday's price action right here, it was a very, very small ranging day. We had a doji candle and the market didn't go anywhere at all. Now, coming into today, we were below sloping support and resistance line, which is a long-term sloping support and resistance line. See the market bouncing here, way back in June, again in November, and then December. So with this doji candle and with the market opening below that level, I was interested in selling from the levels. However, we didn't get the setup. Instead, the market rallied very, very powerfully. So what I did was I waited for the pullback into one of the key levels, took the bullish position. Let's just go back onto the 5-minute time frame quickly. Waited for the market to press up, make the pullback, took the bullish position after the entry signal right here, and took the market up into the zone above. So missed the first trade, but rather than jumping into the market, waited for the setup to come. I was more than willing just to completely ignore the market if the setup didn't come, miss the trade. That does happen quite often when you are trading. The important thing is you don't get sucked into the market on imperfect setups, because what happens is you start to suffer losses. Because the losses are not part of your trading plan, emotions start to take over and you start to snowball those losses. Okay, guys, as always, I hope that was helpful. I hope you all have a good Easter break also. I'm James R, and thank you.